Welcome to speedlearning.com. Now we shall discuss about option trade repair. How will you repair your trade in option trading, means call and put trading. So in case of OPD IDX, option index, what can we do? When you choose which option should we trade for index, you just go to live market, live watch, equity derivative. You will see most active Nifty call and put there. So suppose you bought any call or put in Nifty or Bank Nifty. We can discuss Bank Nifty here. So there was the most active call 18,700 call and 18,400 put. 18,700 strike price call was running at 400 rupees and 18,400 put was running at suppose 350 rupees. Now what happened? You are buying the call and put when there is a big movement in the market. So you are quite motivated and you see a huge movement in call and put there, and by that motivation you are going to make a position there. So suppose you made the combo of 18,700 call and 18,400 put in 400 plus 350 rupees. The total was 750. Now market became range bound for next 3 to 4 days. So the total came down from 750 to 600 only. Call was down and put was also down because the Bank Nifty was range bound for last 3 days. Now what should we do? So you are having a difference of minus 150 point. We can do one thing. You will have to exit from losing position and you can make extra position in any gaining side. So suppose after a big range, 3 days or 4 days range, there will be a movement. There will be a movement and movement will be very clear and sharp. So do one thing. Keep stop loss buying in call and put both the things, and keep stop loss below the low or ATP in call and put both. Means you are putting 4 orders. In call you are putting a stop loss buying above ATP or above high. In put you are putting a stop loss buying order above ATP or above high. And there is a stop loss in both the call and put below low or below ATP, whatever the market condition is there. So if any position, suppose market is going up, Bank Nifty is going up, so you are exiting from the put and you are adding one more position in call side, and suppose there is a movement of 50 to 100 point, so you can recover all your losses there. So that will be the trade repair, and keep a very strict stop loss in additional position what you made today above ATP or above high. So that will be the trade repairing for index call and put. In case of stock call and put, suppose you made a position in SBI. You bought the SBI call put. There was a very good movement in State Bank of India and it was showing good movements there. So you just bought a call and put there, and suddenly what happened? We were expecting a good movement in SBI, but there may be wrong decision. So SBI is not moving for next 3 days and call and put total is not performing, but it is showing some difference in negative side. Suppose call was 10 rupees, put was 7 rupees, total was 17, and now it is showing 15 rupees. And Bank Nifty is still, PSU bank sector is still in middle, so it may be range bound today. So what can we do now? So for today we can do one thing. Keep the stop losses in call and put both the sides, or you can do one thing, exit from this position and enter into any sector which is showing clarity today. So suppose we saw BHEL is showing clarity. BHEL was not moving since last 2 months, and now it is showing a good movement after 2 months continuous fall or weakness. It is showing some movement, and sector is supporting, infra sector is up. So what can we do there? Buy one call and keep stop loss buying in put above ATP or high. It means it is a single leg hedging. To recover those 2 point or 3 point loss in our prior position, we need a little bit risk calculated. So in BHEL, by the end of the day, you got 1 point or 2 point profit, and now with this 2 point profit, you have recovered your prior loss, even if it is giving you 1 point only. So now there remains only 1 point loss. Now we can re-enter into SBI again, and maybe it is you are getting the same position in 1 or 2 rupees less, because if there was a range bound movement, call will further go below the current price, put will further go below the current price, and you sold that combination in 15 rupees, now you are getting it again in 14.2. So almost you have recovered all the losses, and after 2-3 days there was a sudden movement in bank sector. PSU bank sector was up. You can add one more call there, and for hedging you can keep a stop loss buying in put above the ATP or high. Means it again you applied a single leg hedging. One position is held by you since last 2-3 days, and when there was a good movement in PSU bank, you added one more position, one call buying and one stop loss buying in put. That was single leg hedging. So on that day you can have extra profit, and in this way you recovered all the losses and get some extra benefit without any pain. So that, it was the trade repair in option trading. Option trading, options of index, Miss Nifty and Bank Nifty. We have discussed all these things in Hindi also. So in Hindi we took the example of Nifty. In English we took the example of Bank Nifty. You can apply both the things. First of all, I suggest you to go with paper trading, and you will make the mistakes. Definitely you will make the mistakes. And then correct your practices, discuss with us whatever doubt you are having. After some complication, there will be a clear-cut way which will give you the solution lifelong. In case of stock, we discussed Unitech and Reliance Industries in Hindi example. In English, we are discussing about SBI and BHEL. So if you are having any doubt, you can mail us all your questions. This is the practice which can give you maximum benefit. I am repeating again, you can make the mistakes. Don't refrain from making mistakes. There may be mistakes when you are working. Don't carry the mistakes along. You just admit your mistakes and rectify them. That is the way to go ahead. Thank you very much. Keep calling us 97543 81469 speedearning.com.